Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about HUITONGDA NET interim report. HUITONGDA Network Co., Limited provides a range of digital technologies and supply chain capabilities to businesses in China. The company operates through three main segments: commerce business, service business, and others. The key services offered by HUITONGDA include direct sales and marketplace service on its online platform, intelligent business and marketing SaaS plus subscription service collection of merchant solutions, various other related services. These services enable merchants to sell their products to customers through the company's online platform, providing a comprehensive suite of digital technologies and supply chain capabilities. The decline in HUITONGDA NET stock price over the past year can be attributed to several key factors. The company's revenue and earnings saw a substantial decrease in 2024, with a 27.14% drop in revenue and a 39.83% decline in earnings. This trend continued into the first half of 2025, with a further 26% year-on-year decrease in revenue. The net profit for 2024 also decreased by 33.8%, primarily due to the overall decrease in revenue. Additionally, the company's high reliance on short-term creditors and strategic business divestments have contributed to the pessimistic market outlook. Despite efforts to improve sustainable development and quality, the stock has underperformed, lagging behind the FTSE Developed Asia Pacific Index by 32.84% over the last year. These cumulative factors, particularly the sustained decreases in revenue and net profit, are the primary drivers behind the significant drop in HUITONGDA Network's stock price. The primary drivers of revenue growth in the company are multifaceted. The increase in AI-related revenue, gross profit margin, and net cash generated from operating activities have significantly contributed to the revenue growth. Additionally, the expansion into new product categories and channels, such as health and elderly-friendly products, has also driven growth. Strategic partnerships with Ulin Group Co., Limited, and BOIN Hearing Technology, Shanghai Co., Limited, have further boosted revenue. The company's online operation capabilities, including the launch of Tmall official flagship stores and JD.com official flagship stores, have also played a crucial role in driving revenue growth. The AI plus SaaS products have shown impressive results, with 20% of total service revenue coming from AI-related services. Furthermore, customer service and empowerment initiatives have led to improved operational efficiency and increased customer traffic. On the other hand, the primary drivers of revenue decline are largely due to market conditions. Consumer electronics saw a decline of 26% due to price restrictions imposed by national subsidy policy and high base in 2024. Agricultural means of production declined due to feed sector market continued decline, while vehicles and auto parts were affected by fierce competition from new energy vehicles. Homebuilding and renovation materials suffered due to the downturn in real estate cycle, and liquor and beverages saw weak market demand. Net income for the company saw a significant increase of 15.9% year-over-year, reaching RMB 3.56 billion. This growth is also reflected in profit margins, with gross profit margin rising by 31.4% to 4.6%. Operating profit margin increased by 15.9% to 1.5%, indicating a notable improvement in the company's profitability. These changes suggest that the company has successfully implemented strategies to boost its financial performance and increase its competitiveness in the market. The company is experiencing a significant improvement in its operating cash flow, with a notable increase of 65.7% year-on-year. This upward trend is evident from the financial data, which shows that net cash generated from operating activities has risen to RMB 412,551 in 2025, compared to the previous year. Furthermore, the company's current operating cash flow stands at a substantial RMB 9,883,286, indicating a strong and stable financial position. This positive development suggests that the company is generating sufficient cash from its core operations to support its growth and investments. The company's debt level and interest expenses have undergone significant changes. Notably, the total debt has remained relatively stable, but there are variations within different categories of debt. The most notable change is in pledged deposits, which increased by 29.3% from RMB 5.23 billion to RMB 6.74 billion. This increase is largely driven by an increase in current and non-current portions of pledged deposits. In terms of interest expenses, there are mixed trends. Interest expenses on bank loans and other borrowings denominated in RMB increased by 12.8% from RMB 1.298 billion to RMB 1.464 billion. However, interest expenses on discounted bills and bank loans decreased by 9.9%, while interest expenses on non-controlling shareholders' loans also decreased by 42%. The company's financial performance in 2025 was disappointing across various segments. The commerce business suffered the most significant decline, with a revenue decrease of RMB 8,430,003 and a loss of RMB 104,965 compared to 2024. The service business also underperformed, experiencing a revenue drop of RMB 72,944 and a profit decline of RMB 60,058. Meanwhile, the other segment saw a minor decrease in revenue, RMB 10,905, and profit, RMB 5,235. Overall, these results indicate that the company's financial performance declined across all three segments in 2025 compared to the previous year. Management is optimistic about the company's outlook due to its focus on employee training and performance-based hiring/promotion. The company expects a strong year in 2025 with initiatives such as increased IT investment, enhanced SaaS plus business solutions, and strategic partnerships. Additionally, management plans to hold unlisted equity securities for strategic purposes, recognizing gains/losses in other comprehensive income, and transferring accumulated gains to losses upon disposal. The company's financial summary reveals that it has engaged in both dividend payments and share buybacks. Specifically, the company has paid dividends as indicated on pages 52, 63, and 64 of its financial reports. Additionally, it has also bought back shares, as mentioned on page 62. That concludes the financial summary for HUITONGDA Net. Feel free to comment below, and I will be happy to answer them when possible.